Most people think the shock is the number. They hear $7,000 silver and their mind stops there. But listen carefully. The price is not the real shock. The real shock is who is ready when it happens, and who realizes too late that this moment only comes once in a generation. I want you to imagine something for a second. Not charts, not headlines. Imagine waking up one day and realizing that the decision you made quietly, when nobody was paying attention, has completely changed your future. That's how real wealth is built. Not loudly, not emotionally, but strategically. Years ago, silver was ignored. It wasn't glamorous. It wasn't trending. People laughed at those who stacked it patiently month after month. But the same thing happened with tech stocks in the 90s, with real estate before housing booms, and with gold before it shocked the world. History has a pattern, and silver is following it perfectly. Here's the first truth you must understand. The biggest wealth transfers never happen when everyone agrees. They happen when a few see clearly and the majority are distracted. There are investors, ordinary people, not billionaires, who quietly built positions in silver while others chased hype. Factory workers, small business owners, professionals who simply understood one thing: you don't wait for confirmation, so you prepare before it arrives. Silver is not just a metal, it is money with memory. It has survived every currency collapse, every empire, every crisis, and today it sits at the intersection of scarcity, demand, and global instability. Here's what most people miss. $7,000 silver isn't the destination. It's the signal. The signal that industrial demand has overwhelmed supply. The signal that paper promises no longer match physical reality. The signal that patience has finally been rewarded. And when that signal flashes, there will be no time to get ready. I've seen this play out again and again. People say I'll buy when it breaks out, but when it breaks out, fear replaces logic. Prices move faster than confidence, and hesitation becomes regret. The people who win are never the loudest. They're the calmest. They build quietly while the world argues. Here's a mindset shift that changes everything. You're not buying silver to get rich fast. You're buying silver to protect your future self. Think of silver like discipline and physical training. You don't see results every day, but one day the mirror changes, and suddenly everyone asks how you did it. Smart silver investors treat accumulation like a habit. They don't gamble. They don't overextend. They buy consistently, patiently, intentionally. They understand risk, but they understand opportunity even more. Now let me tell you something important. Every major achievement in life, financial or personal, comes from acting before certainty. Confidence is built after commitment, not before. Some of the most successful people I've studied didn't start with perfect timing. They started with clarity. They knew what they were protecting: families, their freedom, their ability to say no when others couldn't. Silver gives you optionality. It gives you leverage without debt. It gives you insurance without trusting promises. And most importantly, it gives you peace of mind. Now here's where action matters. If silver truly is heading where many signs suggest, then the most valuable thing you can do today is not panic. It's positioning. Position your mindset first. Stop thinking short-term. Start thinking in cycles, not days. Position your habits. Regular accumulation beats emotional buying every time. Position your patience. Because when the noise gets loud, calm thinkers win. And understand this. The real reward isn't just financial. It's waking up knowing you prepared while others waited. One day, people will say silver came out of nowhere. But you'll know the truth. It didn't come out of nowhere. It came from years of ignoring, underestimating, and delaying. $7,000 silver won't shock those who were ready. It will shock those who assumed they had more time. Most people fixate on the number because numbers feel concrete and safe. When they hear $7,000 silver, their mind treats it as a finish line, a target, a place where the story ends. But markets do not work that way. Neither does real wealth. Dramatic price level is rarely the outcome itself. It is a message. It signals that something deeper has already shifted beneath the surface. Long before any explosive move appears on a screen, the foundations change quietly. Supply tightens, trust erodes, and demand begins to compete for what is real rather than what is promised. A $7,000 silver price would not appear in a healthy, balanced system. It would emerge in a world where industrial demand collides with limited physical supply. where paper contracts lose credibility, and where people start asking harder questions about what actually holds value.
Oh.
In that sense, the price is not the shock. The shock is that the system allowed conditions to build to that point without most people noticing. By the time a number like that is visible, the forces driving it have already been at work for years. Throughout history, every major monetary shift has followed this pattern. Gold did not rise because it was suddenly discovered to be valuable. It rose because confidence in currencies weakened. Real estate booms did not begin with headlines. They began when credit, population pressure, and policy quietly aligned. Silver is no different. A dramatic price would simply confirm what attentive observers already understood, that scarcity matters, that tangible assets regain relevance in times of uncertainty, and that financial systems move in cycles, not straight lines. When a market reaches an extreme level, it is not inviting participation. It is revealing consequences. At that stage, access becomes harder. Volatility increases, and decisions are driven by urgency rather than clarity. Those who recognize the signal early see the price not as a goal, but as evidence that positioning should have happened long before. They understand that the real opportunity existed in the accumulation phase. When silver was overlooked, underpriced, and dismissed as boring or outdated, a $7,000 silver price would represent a global acknowledgement that something fundamental has changed in how value is measured. It would reflect a collective shift away from assumptions of stability and toward the need for protection and certainty. The number itself would not create wealth. It would simply expose who aligned themselves with reality early and who relied on comfort, delay, and consensus. Real wealth is rarely built in moments of excitement. It is built in silence, in periods where nothing seems to be happening and progress feels slow. Most people wait for certainty before they move, believing confidence comes first and action follows. But the truth is the opposite. Confidence is born from positioning early, from making decisions when outcomes are not yet obvious. Calm thinkers understand that reacting to price spikes or headlines usually means arriving late, when risk is highest and clarity is lowest. Early positioning is not about predicting the future perfectly. It is about recognizing probability and preparing accordingly. Emotional reaction narrows vision, turns investing into chasing, comparing, and fearing loss. Calm positioning expands vision. It allows an investor to see value before it becomes popular and to act without needing approval from the crowd. This is why the most successful investors often appear inactive during major moves. Their work was already done long before attention arrived. History repeatedly shows that those who build wealth do so by stepping in when assets are ignored, questioned, or misunderstood. They do not wait for validation from media or consensus from others. They move when prices are stable, sentiment is low, and patience is required. Emotional investors, on the other hand, are drawn in by confirmation. They feel safer buying what everyone else suddenly agrees on, unaware that agreement usually marks the later stage of a cycle. Calm positioning also means understanding risk differently. Instead of fearing price movement, disciplined investors fear being unprepared. They allocate thoughtfully, size positions responsibly, and accept that short-term fluctuations are the cost of long-term advantage. Emotional reaction seeks comfort and immediacy, but real wealth demands tolerance for uncertainty and the ability to sit with decisions without constant reinforcement. In the context of silver, early positioning reflects a mindset rather than a prediction. It is the understanding that tangible assets regain importance when systems become strained, and that waiting for a dramatic signal often removes the very advantage one hoped to gain. Those who position calmly do not need to rush when volatility increases. They observe, adjust, and protect what they have already built. Wealth created this way is durable because it is not dependent on timing a peak or perfectly exiting a move. It is rooted in preparation, restraint, and the discipline to act before emotion takes control. The absence of urgency becomes a strength, allowing decisions to be guided by structure and logic rather than fear and excitement, and separating those who accumulate steadily from those who arrive only when the opportunity is already transformed into a test of nerves.